In this video, I want to have a look at income tax. So I want to look at what it is and how it's calculated for different people. So anyone who earns an income must complete a tax return. So they have to tell the government how much they've earned, and then the government's going to determine whether they pay tax or not and how much they pay. So if you earn under $18,200 per year in a financial year, so that doesn't go from January to December, it's a financial year instead. So if you earn under $18,200 in a financial year, you don't have to pay tax. You do still have to tell the government that you've earned that much money. You have to complete a tax return, but they won't charge you anything. So the reason we have taxes is the government uses the money that they collect from taxes to pay for public services. So things like schools and hospitals, for infrastructure like roads and the police force, all sorts of things your money goes towards. So how much tax a person ends up paying depends on how much money they earn. So as a general rule, the more money you earn, the more tax you pay. There are a lot of other factors that come into it in real life as well. So things like your spouse's income can affect how much tax you pay. Things like if you have a disability or there's certain other conditions where you can get concessions on how much tax you pay as well. But for now, we're going to look at the basic structure. So how much tax you pay is calculated based on what's called your taxable income. So your taxable income is your gross income minus any allowable deductions. So gross income is all of your income from all the different sources that you might have. So you might have multiple jobs, you might have savings in a bank account that are earning interest. That interest counts as an income as well. So all of your different incomes all added together is your gross income. And your deductions can be different things. So you might get tax deductions for things like donations to charity, or if you spend money on work-related things, like if you have to buy tools or you have to have self-education expenses, you have to pay for things in your home office. So they're what are called deductions. So you don't actually get money back from those, but it means you don't pay tax on the money that you had to spend on those things. So your tax is calculated on what's left over from your total income once you've taken those deductions out. So to explain that a little bit more clearly, we're going to have a look at an example. So here we've got Charlie earned $68,250 last financial year. He also earned $280 in interest from his savings bank account. He has allowable deductions of $250 for work-related expenses and $170 in charity donations. We want to calculate his taxable income. So to do that, we're going to add all of his incomes together. So that's his $68,250 and his $280 that he earned. So we'll add those together. And then we're going to subtract any deductions. So he had allowable deductions $250 for work-related expenses, and he also donated $170 to charity. So what's left over then is going to be the number that they use to calculate how much tax he should be paying. So that would give us $68,110. So they're going to look at this number now and use that to calculate his tax payable. So once you've figured out your taxable income, we can use this table, which is taken from the Australian Tax Office website. These are the tax rates and brackets for 2017 to 2018 financial year, so the one we're in right now. So we can use this table to calculate how much tax you're going to have to pay. So it depends how much money you earn, which bracket you fall in, and then this is how you can calculate it for each one. The other little disclaimer that's on there is this does not include the Medicare levy of 2%. We will have a look in a later video at what the Medicare levy is, but there's going to be this amount plus a little bit extra as well. So let's have a look at how we can use this table to calculate how much tax you're going to pay. All right, so we've got 3 questions here. Let's have a look at the first one. So calculate the tax payable on the following taxable incomes on $30,000. So our tax payable is going to be equal to $30,000, so we have to look down this column and figure out which bracket we're going to be in. So $30,000 fits into this one here. So for this, we're going to use this calculation here. We're going to have 19 cents for every dollar over that $18,200. So we have to figure out how much over that we are, and then it's 19 cents for each of those dollars. So 19 cents, we write that as 0.19. So we're going to have 19 cents times how much we're over 18,200. We're going to go our 30,000 minus our 18,200. That's going to tell us how much over we are. And if we work out that calculation, we're going to end up paying $2,242 in tax. Right, let's have a look at question 2. So I'm going to write TP for tax payable. So tax payable is going to be equal to, this question, it's $87,000 is our taxable income. So that means we're going to fall into this bracket here now. So $87,000, we're only just in this bracket. $87,100 would be in our next one. So we're only just in here. We've got this base amount of money, plus then we're going to pay 32.5 cents for each dollar over 37,000. So we're going to have this base amount. So we're going to go $3,572 plus we're going to go 32.5 cents, so 0.325 if you write it in dollars, times the amount that we're over, that 37,000. We're going to go at 87,000, our taxable income, minus that 37,000. And if we put all of that in our calculator, we're going to come out with $19,822. Now, what's interesting about that number is that's actually this number here. That's the base amount for our next tax bracket. So that's how they've calculated that amount in the table. So if you're right at the top of this bracket here, this is how much you'd be paying. So that's your base amount. And then for any money over that, you're paying a little bit extra for every dollar you earn. So let's have a look at our last example. We've got $125,000. So this time we are in this third bracket here. So we're going to earn that tax payable. We're going to earn that pay that $19,822 plus 37 cents, so 0.37, times the amount we are over that $87,000. So we're $125,000 minus $87,000. If we pop all of that in our calculator, we're going to end up with $33,882 in your tax payable. We'll also have a little bit of a look later on about how tax is actually paid and whether you owe money to the government at the end of the financial year or whether they owe you money, depending on how much tax you've paid and how much you should have paid. But that's having a look at the basic structure of how you can calculate the tax payable.